Well, this is Investor Connect. This is Hall T. Martin. Today I'm here with an angel investor, Bill Feldott. Bill, thank you for joining us.
You're welcome.
So we get a lot of people that have invested in family and friends and other deals and wanted to hear your experience, Bill, about doing angel investing, if not on a more professional basis, a more personal basis, and learn more about what you've done and what lessons you've learned from it and how you advise others on how to invest in startups that may be coming through family and friends.
Yeah, well, it's definitely a challenge. Usually at this stage in the game, it's all risk and little reward. There's a couple that I have invested in. One is a medical device by the name of Minoxa, and that's basically a IP that has been licensed out of Purdue for a bandage that generates oxygen to wounds. And then the other one is a interstellar coatings, which is another licensed technology out of NASA. That's a phase change material that can absorb massive amounts of heat at whatever set point temperature the phase change material is set. So that can be 70 degrees, 100 degrees, or down to 30 degrees or -5 degrees. So those are the two that I've had personal experience in investing in. I would say, most of that investment is been done because of my personal involvement with both of these companies. And so I'm somewhat of a founder and somewhat of an investor in both these companies.
And how did you make the decision to say yes to those deals and perhaps no to others? Of course, with family and friends, there's the relationship component. You know the people pretty well, but beyond that, what did you do for due diligence on these deals?
Yeah, so I mean, I had these people were not lifelong friends. These are recent friends of mine, and I had gone through a program at UT that was focused on entrepreneurship, the McCombs Business School. And these guys were two people that went through it with me, and they were passionate about these technologies. And we did some market validation to determine if the technology had an appropriate size market, or if we were finding that there was no market, or if we found a market that we really liked, what technology would we need to fill this void in the market, right? So we did the due diligence of validation to say that initially we see a billion-dollar opportunity in this market. And it's unserved, and there's competition out there, which is always helps, because if there's no competition out there, you kind of get a little queasy that maybe this is not adding up because there's not enough people that are trying to compete for this. So maybe we've missed something. But when you have competition that's trying to do the same thing in different ways, and you see that there's a big enough market problem that you validated, you get a pretty good indication this is the way to go.
So that's a big factor, is the market research and the competition and the market validation that goes with it as well. What else was part of your process there?
Just the fact that I had some connections into the markets that we were attacking. So in the medical device space, the team that was driving this and myself, we had family that's in the medical industry, either through medical research or pharmaceutical sales, that we kind of, took their recommendations on. And then for the phase change material, I had friends and family that were in the markets, the retail markets that we were trying to attack with this technology, and it helped validate that these are people that I could not only sell to, but I could get direct feedback on whether this was really a problem that they saw a need for.
Well, that's great. That's great. So how do you keep up with the company? Do they issue formal updates, or do you go talk to them individually just to see how things are going? And what's the process there like?
I would say that it's a little different for both. The medical device is much more formal and structured in terms of its LLC and C Corp filing that we've done. So they do. The CEO does put out a report to us, every week or every, bi-weekly as to what what stages we're at, where he's going, what issues and roadblocks, and what the burn rate is, and the amount of runway we have left. The phase change material one, since there's not as much startup costs with it, it's more of just finding appropriate products to commercialize with the phase change material coating. It's a little less structured right now. Although I would say both of these, we've gone through the friends and family investment cycle. We've tried to go for some other angel investing through CTAN, and now both of these are looking to go into an accelerator of some sort. The medical device one has gone into the Wildcatters up in Dallas. It's been accepted, and they'll be starting that in September, I believe. And then the phase change material one is going into an application process with Techstars. So both of these are now taking the next step of getting more structured, getting more of a network through the accelerator programs, and looking to go through their process of driving the innovation.
So are you an active investor? Do you get involved with them and help them with the business, or are you more of a passive investor at this point?
No, I mean, with the startup community, it's the more active you are and the more involved you are, the better feel you have for what the business is doing, and that if it doesn't work out, you've put everything into it to know that it was given the best shot, right? So I would say in terms of angels, you don't want to be passive because you'll get mad when your money disappears. And you'll feel like, well, they could have done this and they could have done that and they could have done this. Well, that really is on you at the angel investor to make sure that all these things were tried or done at all costs to make sure that it had the best shot for success.
And so, well, I agree. As an active investor, the returns are much better than as a passive one by a long shot. But
Yeah.
what role do you find yourself playing with these companies if you're not a technical expert in these areas? What other things are you able to do?
I drive a lot of the marketing aspect of it, the branding campaign part of it, and then my technical background allows me to build the website, put out the splash page as to what we are and what we're trying to do. And that's all to build up that branding and build up that story that drives further investment or further interest, right? So that's pretty much what I do. And just because I have a lot of connections, I've lived in Austin for since '90. I know a lot of people in the VC world and in the startup world that I can usually put people together just to hear ideas and make sure that everything's got the best shot of opportunity.
So what would you advise another angel investor before they go into this? What should they know before they do angel investing?
It's high risk, but the returns can be far better than the stock market, right? If you have a percentage of your portfolio that you want to dabble in this sector or this type of investing, the returns can be incredible. I think you have to understand the technology that you're investing in or the business you're investing in and how they're going to differentiate themselves in the market and how they're going to drive, adoption rates and how they're going to drive growth and what the cost structure is going to be. And I think you have to evaluate if this is that type of business that's going to be around, or if it's missed its market already, or if it's too early to market, or things you have to really look at and understand. Not so much from a pure investment point, but that fact that is this business viable? That if I put my money in today, in 5 years, I might have the potential of getting my money plus some out, right? If it's so if it's not something that you understand and that you think the business is viable, I wouldn't invest in it. If it's not something you're passionate about, I mean, you can invest in something you're passionate about, but that may not be the best investment, especially in the startup world. But if it's something you are, you can give that a shot.
That's great. And would you do it again? Would you invest again if you had the chance to do it all over again?
Oh yeah, I mean it's an iterative process. You keep learning. Every time you invest in one, you realize that maybe I know more now that I could have really done this better for the next company, or earlier on we should have done this. You're just constantly learning. As long as you're constantly learning, you'll only get better and better at it, right? So I don't think you want to swing for the fences your first time out. I think you want to put a toe in the pool and see if it's something you can tolerate and that you enjoy, and then go from there.
What did you like best about the process of investing and working with startups?
It's much more direct and honest, right? I mean, I think a lot of times when you get into a more formal investing, there's more talk about the paperwork and making sure all the I's and T's and the contracts are crossed. And a lot of times, this type of investing is very matter of fact, filled out on a piece of paper, and it's just notarized and signed by the parties, and that's about it. So you do feel like you know exactly where your money went to, and it's not, and you know exactly what is supposed to happen with that money, as opposed to putting it into a 401k or a diversified asset portfolio with the stock market. It's not something that you really can watch every day or see dramatic changes on all the time.
If you could change one thing about the process of funding startups or working with startups, what would be the one thing you'd want to change?
Well, I've seen a change, and I haven't been doing this that long, but the change I've seen is that everybody is always trying to de-risk as much as possible, right? So I see the shift where angels are now almost acting like Series A investing, right? They want to see sales and they want to see products and stuff like that. And so it is changing the landscape. And I would say either, this type of investing needs to adopt a new branding in terms of, what type of funding you're seeking, because angels now seem to want to think of themselves as Series A, even though they're still calling them angels. And most of these people that are looking for angel investment don't usually have sales or a go-to-market product ready yet. So it's a little bit more time-consuming and frustrating when you think you're pitching to angels for, seed money, and they're telling you, well, come back to us when you have, some sales and a finished product. And it was like, well, that's kind of why we're here, is to get that initial funding to develop that. And so I would kind of change that process, that it was a little more clear about this is all risk and early stage funding, this is de-risk funding, and then this is later round funding. I would try to figure a way that the industry could understand that better.
Yeah, I mean, someone once told me that in the financial world, everyone always moves up into the right or to later stage. And so in the 90s, the angels were true seed investors, venture capital were the go-to-market investors. In 2006, when C10 kicked off, angels at that point were the go-to-market investors, and venture capital had moved to the growth stage. And then you're seeing now that the venture capital is now acting in some ways like later stage growth, and angels are now the new growth stage investors, and someone else is going to be the seed investor, I guess, crowdfunders or somebody else's. Maybe the accelerators are filling a lot of that gap as well to do that true seed stage, whereas two guys with an idea and really no traction at that point. But it's always interesting to see how over a period of time people gravitate to later stage to de-risk it at some level, work with bigger numbers, shorten the time to exit. I guess there's a lot of reasons why that happens.
Yeah, and it just creates, as everyone moves up and to the right, it just creates that vacuum at the early stages where, you've been told if you put together a good market plan, a good business plan, and you validate a market and have a good lockdown IP and everything, that you can go get this type of funding. And really now, we're seeing that it's, the crowdsource arena and friends and family tend to be the early stage seed funding, and then the accelerators are, I think, trying to maybe fill that gap to a certain extent. But it's a little bit different than I originally intended it to be, or hoped it would be.
Well, I once went to an Angel Capital Association summit, and the presentation one group gave one year was, angels put in $25 billion into startups. Family and friends put in $65 billion into startups. And so it seems like it's always been true that the family and friends are the real seed stage anchor investors, even though they themselves are really not an asset class by any means. But I think they've always shouldered the majority of that burden wherever we were, for the most part.
Yeah, no doubt. and then it makes Thanksgiving very uncomfortable sometimes. Right?
That's the downside to it, for sure.
Yeah.
Well, as we wrap up here in our time, thanks for spending it with us. What any final words of that we didn't cover? Any other things you want to mention about the process or your experience?
No, I mean, it's definitely a different way of investing. Like I said, if you have money that you want to play with in this sense, it's a great way to get some, huge returns. It's also a really good way to lose money real fast. So, do your homework, feel good about what you're investing in, be able to articulate it, understand it, and understand the vision they have, and hopefully stay active with it, is what I would say.
Well, that's great. It can be a lot of fun, and it sounds like you're having a lot of fun with it as well. And I want to thank you for taking time to share your thoughts with us today.
All right. Thank you.